How long should you keep business records? Watch this video to learn some basic record retention rules to think about for your small business. This might sound straightforward, but you'll be surprised how many thousands of small business owners fail to follow the rules and unfortunately suffer IRS's wrath. Whether you're swamped with paperwork or running a smooth office operation, watch this program to see how long you should keep business records. Welcome back, folks, to another edition of Sweetie Kiwi. How are you doing today? I hope you are doing marvelous. I'm doing fantastic if you were to ask me. And if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today I want to talk to you about how long you should keep business records. First thing first, how long you should keep a business records rather, the answer depends a great deal on whom you ask and what the record pertains to in your business. The Internal Revenue Service sets some basic record retention standards for tax records. Lawyers, accountants, banks, and government agencies, however, all seem to have different ideas about how long to retain business records depending upon your individual business circumstances or the state in which you live. In our digital era, both paper and electronic documents need to be considered in your record preservation plans. Now, let's talk about some basic record retention rules to think about for your small business. Business income tax returns and supporting documents. Now, this is a no-brainer, right? It makes sense to keep a final copy of your business income tax returns and related correspondence with the IRS permanently to help you prepare future or amended returns. Now, when I'm talking about related correspondence, as a business owner, you probably have been corresponding with the IRS. Sometimes you get notices or you get requests for information, anything you get from the IRS. This is just a rule of thumb. Anything you get from the Internal Revenue Service, just keep it. Keep it for as long as you can. The IRS recommends that you retain supported records that corroborate any business income or deductions claim until the period of limitations expire for that return. The period of limitation is what? The time period from your filing date in which either you might seek to amend your return for a credit or refund, or the IRS may pursue your business for additional taxes. So typically what happens, the Internal Revenue Service can come after your business for failing to report income for up to 6 years. So 6 years after your filing, the IRS can actually come after you, but they only come after you if the amount is greater than 25% of your business's gross income, right? So the IRS, I'm going to repeat that because this is very important. We've seen a lot of small business owners make that mistake. So the IRS can come after your business for failing to report income for up to 6 years after your filing if the amount is greater than 25% of your business's gross income. Now, what is gross income? Gross income, to be very simplistic here, it equals sales, so your gross revenue, minus your cost of goods sold, so your cost of sales. That's the gross income. That's the top line income. So sales minus cost of sales. If you filed for a deduction for a bad debt or a worthless security, the agency suggests you keep your supporting tax records for 7 years. So under these conditions, you may typically wish to retain your supportive records for at least 7 years. What I'm trying to say here is that the general advice that is coming out here is to be safe, retain all your business records, especially income tax returns and supporting documents, for 7 years at least. Employment tax records. If you have staff, if you have employees, the IRS suggests that you retain all employment tax records, that is, for a minimum of 4 years after the date those taxes were due or were paid, whichever is later. This employment tax records include such items as your employer identification number, amounts and dates of wage, annuity, and most importantly, pension payments as well as tax deposits. You also want to include the names addresses, social security numbers, dates of employment and occupations of employees, and records of allocated tips and fringe benefits. All right, I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We're also having a conversation today around how long you should keep business records. Now, let's talk about business asset records. If business property is involved, the IRS recommends retaining your records until the period of limitations ends from the year you dispose of that property. What is business property? Business property is basically everything you put on your balance sheet in the category called capital assets or long-term assets. I'm talking here about cars, equipment, land, real estate, and so on and so forth. So business property is anything that will serve the business for more than a year. That's the threshold, that's the cutoff between short-term asset and long-term asset. So a long-term asset is an asset that you intend to use in the business for more than a year, whereas a short-term asset is an asset. It's an asset that you intend to use in the business for 12 months or less. Now, so the records, the business asset records, will help you calculate applicable depreciation, amortization, or depletion deductions and to determine any gain or loss on their property. Depreciation applies to capital assets such as machinery and equipment. Amortization applies to intangible assets, assets that have no physical form. I'm talking here about patents, trademarks, right? Goodwill. And depletion applies more to mineral resources. So we're not going to get into the technical aspect here, but remember that those depreciation, amortization, and depletion are called in accounting jargon non-cash transactions, non-cash expenses that nonetheless reduce your income and your income taxes. And gain or loss will depend upon the market value of the property versus the book value of the property. So if the business property is real estate or a vehicle, you want to keep the deed or a vehicle title in a safe, secure spot until you sell or otherwise properly dispose of that property. Let's talk about business ledgers and other key documents. Accountants generally, enrolled agents, and CPA, certified public accountants, they are usually very conservative, and they will recommend that businesses keep their journal entries, profit and loss statements, financial statements, check registers, and general business ledgers permanently. Nowadays, it is possible with the cloud. Back in the days, 20 years ago, 15 years ago, it was kind of complicated because businesses had to take care of a lot of paperwork, massive paperwork, right? So when it comes to, so those, I would say 10 years is kind of cool. For business ledgers, 10 years is cool. Now, when it comes to other key documents, I'm talking here annual report, corporate bylaws and amendments, board of director information, annual meeting minutes, and business information documents, you want to retain those on a permanent basis or at least 10 years. Aside from supportive tax records, other documents such as accounts payable, receivable ledgers, so accounts payable and accounts receivable ledgers, invoices and expense reports should be retained for a minimum of 7 years. Let's talk now about canceled checks. Canceled checks without a tax or other significant business purpose can normally be destroyed after about 7 years. If a canceled check is a supporting tax document, then keep it. That's just a rule of thumb, right? So again, here, the idea that is prominent here is to be safe, keep your business records from anywhere from 7 years to 10 years. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We're also having a conversation today around how long you should keep business records. If you love the clarity and quality of the content so far, please consider subscribing to our channel and turn on the notification bell so you can be informed in real time whenever we release a new show. And we do this kind of shows every single day, rain or shine. Comment below, also be part of the conversation, share this content, and like it. I want to talk to you about human resources file. Now, human resources files are kind of critical. You may have numerous other employment files related to current or former employees and applicants to your firm. Excluding employment tax records, files relating to current employees should be retained while they were working for you and at least 7 years after a current or former employee has left or been terminated. For any job applicants who are not eventually hired, you have to keep those files for at least 3 years. If a staff member has suffered an accident on the job, consider retaining those records for at least 7 years after that matter was finally resolved, or up to 10 years after which any workers' compensation benefits were paid. If a staff member lodged a discrimination claim against your business, consider retaining those records for at least 4 years after the case is initially concluded. Think about keeping records of employee benefits, pension payments, or profit sharing plans permanently. This is important, folks. So let me repeat that. When it comes to records of employee benefits, pension payments, or profit sharing plans, keep those records permanently. What about bank account and credit card statements? Generally, this record should also be retained for about 7 years. This retention period may be longer. It really depends on your industry, but they may be longer if they are supporting documents for tax purposes. Nonetheless, if these statements have no tax or other key business purpose, then consider retaining your business's detailed annual statements for 7 years and disposing of underlying monthly statements after about a year. Now, nowadays we are very lucky to have the cloud, and companies have seen their record keeping ability really double or triple or quadruple because of technology, right? So I would say anywhere between 7 and 10 years is pretty fine. Now, let me give you a quick recap of today's conversation. I think we are already at the end here. So today I was talking to you about how long you should keep business records, and I spoke about business income tax returns and supporting documents, employment tax records, business as asset records, business ledgers and other key documents, canceled checks, human resources files, bank account and credit card statements. All right. So before I end today's conversation, remember, I want to give you a quick pro tip here. There may be times when you must suspend your usual record disposal plans, such as when litigation is likely or pending on a business matter, right? You are sued or you are suing another party. You may wish to consult with your attorney or a tax professional to look into your individual circumstances to help guide your particular business on its record keeping and disposal policies to avoid, for example, identity theft and to protect sensitive business information. Be sure to properly dispose of or shred appropriate business records. All right. I will see you another time. But until then, remember, stay marvelous.